Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Tuesday. Hopefully everybody's having a GGD, a great green day in the market. I always wish the best for my viewers and subscribers. So guys, today we're going to look at the overall portfolio, our metrics, give you a little bit of a deep dive about how I think about short versus long-term investing while we're going through it, my buying power, and then the individual stocks and how they performed, and of course, what is on my watch list and the prices I want to buy them at. So first off, guys, for today, we are down about $130. Not worried about it. For the 1 week mark, we're up about $660, up 1.3%. The 1 month mark, we are up about $1,850, or right about 3.75%. 3 month mark, we are up $286, up about 0.5%. Year to date, which keep in mind, guys, this is only really the first quarter, end of the first quarter. We are up $463, or about 1%. And then for the 1 year mark, we are down $2,100, down about 4%. So guys, here's how I think about short-term fluctuation, and I get this from Ben Graham and Warren Buffett. So in the short term, the market is a voting machine. So people are emotional, right? And so their emotions kind of dictate buying and selling. Short term dictates stock prices. And so during the short term, anything can happen, right? There can be a black swan event, like maybe an oil issue or political stuff when there's elections, stuff like that. Of course, you had like the COVID pandemic can happen, and then of course like there was a huge bank, Silicon Valley Bank, that got closed and then got saved by the government, or whatever. The financial district or the financial sector just kind of got decimated at that point. So anything can happen, right? Nothing is guaranteed, and stocks go up and down every day based upon buying and selling. And so short term, it is a voting machine, right? But long term, it's a weighing machine. And so the main goal for me as an investor is, of course, I want to generate passive income with my dividends, and I want that to grow. But the thing that I love about it being a voting machine is sometimes people vote incorrectly. And there's one stock, AbbVie, that people really voted incorrectly on short term, and I had a long-term mindset. And so short-term, anything can happen. And when you feel like a stock is mispriced, you can take advantage. So long-term, I am actually up $15,645.26. Or I have an accumulative return of about 44%. And so in the short term, anything can happen. But in the long term, earnings follow stock price. And so as long as the earnings are growing and the companies are growing and they're smart with their capital allocation over time, and they don't pay too much in dividends, and they don't make bad acquisitions or are stupid with where they put their money, as long as I pick companies that are investing how I would choose to invest and being smart with their capital, I'm going to make more money. And so that's why I love it, because over the long term, I have a lot of faith in the companies that I've picked. So, of course, I have buying power sitting there at 52.30. And as of right now, I plan on putting that money into T. Rowe Price. So in the short term, it's a voting machine, and the long term, it's a weighing machine. So this is a long-term game for me. So, starting off with Realty Income, we've got 143 shares, $8,800 worth of market value. Average cost is right around $67 per share. 17% of the portfolio is in Realty Income. Today, we are down $5. Total, we're down $720, down about 7.5% here on Realty Income. This is a stock that I plan on holding for decades, guys. I love the business model. It's a no-brainer. It's like being a real estate owner without all the BS. I don't have a tenant calling me about a leaky roof or a messed up faucet or a busted toilet, or I'm not, pounding on somebody's door, on the day of rent collecting. This is passive real estate investing, essentially, and I love it. So I plan on holding Realty Income. I want to buy more shares, but I think that there's a better gleaming deal in the portfolio. I think that there's a better no-duh deal within the portfolio. So as of right now, I love it at this price, but I would not buy more because I think that there's a better opportunity. Next, we've got Coca-Cola. This is one of my personal favorite stocks. Honestly, I want this to mirror Altria eventually. That's going to take a boatload of capital because price to dividend, Coca-Cola is not as efficient when it comes to the amount that they pay out. But I like Coca-Cola a lot more than I like Altria. The only reason that I have these flip-flopped is because, one, I bought Altria at a pretty good price, and two, Coca-Cola was high. And it's kind of back up to that area where I'd no longer purchase it. So Coca-Cola is kind of one of those stocks that you really have to be patient and jump when it makes sense to buy it. And you don't get a lot of volatility in the stock. So Coca-Cola, as of right now, I only own 10 shares of it. $638 of market value. Average cost is right around $61 a share. 1.25% of the portfolio is in Coca-Cola. Today we're down 80 cents, not a huge deal. Total, we're up over $30, up about 5% on Coca-Cola. And so while it's not a huge deal, it's about a $3 bump up from my average cost, but I want to buy them below 61 bucks a share. So I'm comfortable at this price to add more shares, but it goes against my value investing strategy. So, of course, I'm only going to cost down average. You don't want to buy higher because then you're getting less of a yield for more money. So I want to pay less and get paid more for that money. So I'm going to sit and wait for Coca-Cola to be at a price where I would purchase it, but my goal is to get to 100 shares. As of right now, I'm a little low on cash, so I don't have a lot of extra to be pouring into this position, but even if I had extra cash, I would not be putting it into Coca-Cola at this time. Then, of course, we have the big payer for this set of months being Altria, ticker symbol MO, 315 shares of this Dividend King, $14,800 of market value. Average cost is right around $47.40. As of right now, 29% of the portfolio is in Altria. That's about a third or 30% of my investment portfolio. Today, we are up $113. Total, we're down about $100. We have a dividend coming in on the 28th, so on Friday, of around $300. So this plus the $52 of free cash, that should give us about $340-ish, right? $350 of investable cash. And as of right now, I think that's going to be going into T. Rowe Price. And guys, eventually I do want Coca-Cola to mirror Altria, but it will take a lot of capital. Then we have Apple, which was down pretty significantly, only $1, but that's a pretty big drop in a single day. But we have one share, $164 of market value. Average cost is $132. 0.32% of the portfolio is in Apple. Today we're down $1. Total, we are still up $31 per share, nearly a 24% return on Apple stock. So it's down, but obviously not down enough. I would need this to drop another $20 or another like $30 for it to make sense for me to be purchasing it. And again, I want Apple to actually surpass AbbVie, but it's going to take a lot of capital. Next, of course, we have the best performing investment in the entirety of the portfolio. That would be AbbVie stock. 95 shares, $15,000 worth of market value. Average cost is around $95 a share. 30% of the portfolio is in AbbVie. Today we're up $77. Total, we're up $6,622, or we have an accumulative 73% return on AbbVie. Upcoming dividend paid on May 15th of $140.60. Guys, the beautiful thing about this is when I originally bought the stock, it paid me $1.07. Now it's paying me $1.48. So great dividend growth, amazing share price appreciation, which kind of ticks me off because I'd buy more if I could. But this is by far my best individual investment, and I love AbbVie stock. Next, we've got T. Rowe Price, which is down pretty big today, down $3.13 on my shares. 101 shares right now, $11,000, nearly below that of market value. Average cost is $121.59. 21.5% of the portfolio is in T. Rowe Price. Today, we're down $300, down about 3%. Total, we're down over $1,200, down 10%. So guys, this is the deal that I think is the overall best place to put my money right now in the stock market, because it's down big. My average cost on this position is 100 and I'd say $22 per share. The 52-week high, I'd have about a $14-15 per share of upside, right? But now I have about 20. So if it's at 130, I'd say 130, right? So I've got about $20 of upside per share on 100 shares if this was my average cost. So I'd love to cost down average on T. Rowe Price, just pour money into this position and boost up the third set of months so that I could possibly make it my second highest paying month. Right now, 14710 is the highest, then 25811, then 36912. So this is my lowest paying month, and that is why I want to pour money into this position to really even out that dividend income. Eventually, I do want it all to be pretty parallel to each other. I want it to be evened out, so I don't have, say like, in 10 years, say I have $5,000 one month and $1,500 the next. I want it to be pretty even so I can have dependable income that I can use to pay off some of my bills. So that's the long-term goal. Now, of course, I do have a couple stocks on the watch list. I've got Visa that I want to buy at 190, which it's dropped pretty. Well, it's actually pretty much break even, but it did drop $3, but then after hours it bumped up back up, so pretty much break even today. And then, of course, Berkshire Hathaway, I want it at $300 on the dot. Not touching it here at 324. So guys, overall, love the fact that T. Rowe Price is down. Let's hope it stays that way until Friday so I can really purchase the quality company that I want at the price I want. So excited. A lot to be happy about today. Closed out over $51,000, which is awesome. Love seeing that number. But if it dropped below that and there was a better deal, let's say Coca-Cola dropped to like 55 or something, I'd take that too. So with all that being said, guys, thank you so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy. And when you do, hit the bell notification so you don't miss any updates, guys. I post Monday through Friday. I love it. Love dividend investing. Thank you so much for watching, and I'll see you guys tomorrow with another portfolio update. Take care, guys.